This is the MTPredictor weekly market update for February 2nd. Well, January is behind us, the first month of the new year here, and the S&P was down about 4%. The Dow was down about 5%, as the Hindenburg omen indicated in December. It called for about a 75% chance of a 5% correction, and there's about a 25% chance of a full-blown crash in the 15 to 20% range. So we'll see. We pretty much got that 5%, at least out of the Dow anyway. We'll see what the S&P does. We're going to take a look at all that here in a minute. We also got the Fed meeting out of the way, and they're cutting another $10 billion of stimulus. We had some problems in the emerging markets from Turkey, Argentina, and the devaluation of the currencies and so forth. Some of the actions they've taken have failed to support them, and this was spilling over, of course, into markets similar to the Asian contagion. If you remember in the 90s, that prompted the Fed to begin cutting interest rates, and that didn't last. The market eventually did upturn, I think overall, as long as our interest rates remain low, stocks will continue to grow. We are correcting at the moment. So let's just take a look at this. And before I get into the charts, there's the saying that as the Standard & Poor goes, or the S&P goes in January, so goes the year. And if you go back 50 years of data, it's mildly true about 58% of the time. If January's up, the year is up. But if you go back further than that, it's really statistically insignificant. It's no more a probability than anything. It basically falls in that normal statistical probability is probably the way to say it. So maybe a little more recently, has a little bit higher percentage of being true, but if you go back further than the last 50 years, it doesn't really give us a good indicator, or it doesn't have much predictive value. But we'll see what happens. Let's get to the charts here. Let's again start with the S&P. Let's go to the bigger time frame, the monthly chart here. Back here was our last significant swing high. Back before the crash of '08, markets were at all-time highs there. And if we right-click and take our decision point tool, again, this is a level we anticipate if the market reaches this level, it needs to make a decision. Normally, this will act as support or resistance, and we anticipate that the market should correct from this level. If the market chooses to go through this level, then it's saying the decision is that it's going to go through the level and to the next resistance level. Because about 2/3 of the time the market will bounce off support and resistance levels, and about 1/3 of the time the market wants to trend through these levels. So we did anticipate 1800 in the S&P because it's a nice round number that they'd go for. They overshot that to the top of the monthly resistance here, and we've begun to get we got some correction. Now let's kind of drill down. We'll go to the let's see the weekly chart here again, so you can see the last 3 weeks we've been selling off here, and this little pullback in terms of the weekly chart, you can see, let me just remove the major monthly resistance out of the way, is we've come back and pulled back into this, make this a little bigger here, right into the top of the wave 4 support area here. All right, so we can now project up wave 5. All right, we had a neutral. We closed the week on a neutral candle here. That gives an indication if buyers are overcoming sellers or sellers are overcoming buyers. Well, basically it's neutral here. So what we need to see this week is if this level is going to hold as support, we need to see a blue buyers candle, where buyers are in fact now overcoming sellers in the support area. All right, but let's project up wave 5 using the wave price target tools here. I'm going to go up wave 5. Start at the bottom of wave 1 here. up to 3 to 4. Here's our minimum wave 5 target now in the S&P. It's just above 1850. We're looking at about 1860, 1862 is the minimum wave 5 target there. All right, in terms of the weekly chart. Let's look at the Dow here, drill down to the daily chart. I'm going to use the Dow. And I'm looking at the patterns a little better here on the March contract, looking at the day-only data. And you can see it was what we were looking at before, where we came right into typical wave 5. Move this out of the way here. Moved right into the typical wave 5 target. All right, the tendency is you anticipate that we should get a correction back to the wave 4 DP, which is this level here. Now, because we made this little initial impulse move away, and then we've got a corrective move here, this little corrective move here is a potential wave 2, and you can see the Dow then went the big wave 3 down, maximum wave 3 down target was hit here. So we might pop down this week down into the wave 4 DP, and again, another area where the market needs to make a decision. We know the weekly chart is in weekly wave 4 support in the S&P down around this area. All right, so we may get another move down, first, or from here we may correct. We can project up wave. Let me just move the wave 3 targets out of the way here, and let's project up wave 4, because we may go a wave 4 up before we get one last leg. So here's the wave 4 resistance area. So if we get a rally first into this level, we may then roll over into wave 5 and finally get into the larger degree here, wave 4 DP. And again, this is the area where the market will have to make a decision. If this holds as support, then the trend which was up prior should then continue up, which would probably, at this point would coincide with what we're seeing on the weekly chart, that this area is a weekly wave 4 support heading into wave 5. So maybe we get another rally and then another sell-off, or we could just simply sell off into the decision point from here and rally and maybe just take out the wave 4. We'll see what happens first here. Again, we're not trying to necessarily predict the market in terms of trading. We're just looking for areas of low risk, high reward trades. So in other words, when we went wave 5 up here, you can see we're right into this typical wave 5 target. In terms of the daily chart, you've got a red candle here telling us the sellers are now overcoming the buyers in this resistance area. And let's say your target is the wave 4 DP here. If you wanted to set up a low risk, high reward type trade based on those parameters, then there's your entry stop and your target, which would be almost 9 times what you'd initially be risking. That's all we're looking to do. Right? If we're wrong and you get stopped out, you lose small. If you win bigger. All right, so we're just looking for areas of low risk, high reward trade setups. And just to kind of drill down, I'm going to go down. This is the NQ on a 3-minute chart. This was Friday's trade. Let me clear this analysis off here. And just to show you, this stuff works on the 3-minute charts just as well as it works on the daily chart or weekly chart. So here the software gave a sell signal on the 3-minute chart in the NQ on Friday. If we check the pattern here, the reason this was interesting is if we check the pattern here, it was also right in the minimum wave 5 target there. Here's your red seller's candle. Now this was what we call a standard trade setup, so we can just choose analyze a setup, and the software sets the trade up here. In this particular account, with this particular risk tolerance, it's a $400 risk to take out a $1,500 profit. Again, no guarantees in trading, so if you're wrong, you lose $400, but if you're right, in this case, you're going to win 3.8 times your initial risk, or $1,500 at the target there. So again, the same pattern on the 3-minute chart that we're looking and observing on the daily chart in the Dow. 5-wave pattern up, anticipating this correction back to the wave 4 DP. And again, this is the area where the market needs to make that decision. It went through this DP, so we go back to the bottom of wave 1 here, and we take another DP off of that level. Because the tendency is if it takes this one out, it's going to find this level, and that's exactly, you can see exactly where it turned to the tick. Right, that's just the tendencies. Again, low risk, high reward trade setups in those areas. We're not necessarily trying to predict the market. We're in an area where we anticipate we should get a opportunity to have a low risk, high reward trade. If it doesn't work out, we take a small loss. It's a controlled loss. We've done our job. If it does play out, we allow ourselves to this to play out and get to the target. We take the large reward. Now you've just financed almost 4 losing trades, so you'd have to lose 4 times in a row after this one trade just to give back the one profit. Right? That's a better position to be in rather than the majority of traders that are losing money who are taking small wins and they have big losses, and those big losses end up wiping out all those small gains, especially in those for the day traders. Okay, let's go to silver. And so we're finally starting to get a little more rollover. We haven't taken out that prior swing low, but here's the analysis again. We went extended maximum beyond wave 5, the big blow off top here at 50 or thereabouts, and then we got this kind of distribution happening in this descending triangle. They broke the bottom base of that triangle there, and again, wave 5, if we go wave 5 up, we anticipate a correction back to the wave 4 DP. Same thing happened in silver, right? This is the weekly chart, and it's a little bigger, obviously, time frame than a 3-minute chart. So it took a while to play out. But here, the market needs to make that decision. In the meantime, you can see the pattern, this last pattern, the wave 3 down, a corrective movement right into wave 4 here. I can probably make this a little bigger for everybody. And then here's the minimum wave 5 target here. So again, remember, I just didn't like, you see how the volume increases at these market turns in silver? Another increase in volume, the market turned. We weren't seeing that increase in volume where we'd anticipate the market to turn. So I thought that maybe this was not going to be a turn back to the upside, that didn't have enough juice to do it. And we haven't taken out the swing low here yet. I mean, we're headed in that direction. We're going to test the $19 level with the target there around $17.50. All right, so we'll see. We'll see what happens here. If they just continue to kind of go sideways here, or we get that one last pop down into the target before we get a rally off of that level. If we go wave 5 down, here's your typical wave 5, which would be down around 14. So in one of these levels, we'd anticipate some type of corrective move, potentially back to this wave 4 DP. Again, just the tendency. All right, so we'll see how this finishes out. Again, stops to break even, so that if the analysis is wrong at this point, you're not going to lose anything other than the time in the trade. All right, let's just look at the. I was looking at the Australian dollar, Aussie dollar, US dollar pair here. Again, just to show you the patterns. This happens to be a daily chart in a forex market, and you can see a nice 5-wave pattern up right into the typical wave 5 resistance. These candles are important again because this is telling us for the first time here we've got sellers overcoming buyers. Actually, you had it here, but you can see that that low on that red candle was never taken out, so you would never, if you set up a trade there, it would have never taken you in. Made a new high. Here's your next opportunity with the red sellers candle. Sellers overcoming buyers in that typical wave 5. That's an area typically where we anticipate the market should correct again at a minimum back to the wave 4 DP. And again, we call it a decision point because the market needs to make a decision here. If this holds as support, then the trend which was up prior should continue up. If they take it out to the downside, again, we take our DP off of the bottom of wave 1. Okay, that's this level here. And we'd anticipate then that if this level gives way, then we're going to find this level. And of course, we did find that level. And look how it unfolded as a nice 5-wave pattern down. at the moment in the minimum wave 5 support. And so again, it's an area where you could build a low risk, high reward trade here. So in this case, maybe risking $300 to take out about $1,100 if it does what the tendency is, and that's correct back to the wave 4 DP. No guarantee, so if we lose small. If you get stopped out there below the current lows, then you're going to take the small loss. All right. So that's the beauty of the MTPredictor software. Trade when the patterns are good, when everything comes together like this. That's when you want to be trading. Let's just look at the we'll look at the DAX here just to show the same pattern here in the DAX. Again, that DAX 10,000 is out there. Obviously, we're correcting here again, right in the typical wave 5 target there. Let me just move some of this down. All right, we've corrected back to the wave 4 DP. That's what we anticipated. Doesn't mean it's going to happen, but it did. Now we're looking at this level. If it holds as support, then the trend, which was up prior, should continue up. If it gives way, then I've already taken the DP here off of the bottom of wave 1. So here's the wave 1, here's the bottom of the wave 1. I've taken the DP here. So if this gives way, we know we should anticipate that the DAX is going to dip below potentially 9,000. If this holds as support, then maybe we make a run eventually for that DAX 10,000. We'll see. We can take a DP off of the wave 5 high here now and give us another level of resistance that'll come in before that 10,000 level. But so we'll see. Again, if you're going to trade it, you're looking for low risk. Here's your red seller's candle in the wave 5 target there with your wave 4 DP as your target. All right, you've got about 2.9 times your initial risk there, so that would work with your entries, your stop, and your target. Small risk, high reward, and that's it. All right, hope that's been helpful. We'll take a look and see, again, a full economic calendar this week. We already had that Fed meeting, got that out of the way. New trading month here. Usually the first day of a new trading month is a good one, so look forward to maybe a good day of trading tomorrow. We'll see. Other than that, we'll be back next week. Enjoy the Super Bowl, by the way, those folks that are into American football, and we'll see you back next Sunday evening.